So welcome again to this particular session. So after acquainting ourselves with what we call treatment of bad debts, provision for discount and provision for, of course, bad debts, now we are moving over to some other adjustment. Although you are familiar with all these adjustments, even I know, but in spite of that we shall cover those up, correct? So that is second type of adjustments which we are picking up. This relates to your outstanding expenses, correct? Outstanding expenses. Outstanding expenses. Outstanding expenses. First of all, what do you mean by that? Outstanding expenses means expenses which are due but not paid. That means till up to the end of the accounting year, these expenses haven't been paid in spite of the fact that they had become due. Correct? So you haven't paid these expenses. These are known as outstanding expenses. So we try to grab the treatment now. It is better to grab the treatment with the help of trial. That helps, I think. Isn't it? So this is the example before you. This is debit balance and this is credit balance. Let us say item given to you is salaries. If salary is given in trial balance, it means this amount you have already paid. Let us say it is 1 lakh. And in the adjustment, let us say you are provided with an adjustment salary outstanding. Salaries outstanding means these salaries have become due, but you haven't paid them off till the end of the accounting year. Salary is due or outstanding. Rupees 20,000. So what will be the treatment? I have already told you any adjustment will encompass two treatments, correct? This is your trading and P&L and this is your balance sheet. In the P&L account, just wait, P&L and balance sheet. First of all, always incorporate the item which is given in the trial. So salaries you are going to put towards the debit side, 1 lakh, only treatment. Item which appears in trial is posted only once, as you know, correct? Now salary is outstanding. Salary is outstanding, and as you know, the treatment, first of all, it will be added to the relevant item plus outstanding. I'm using the short form, 20,000. You will write in the outer column 1,20,000. Salary outstanding once it will be added to the relevant item, whether it relates to trading, whether it relates to P&L. Secondly, then because it is an outstanding amount, that means it is yet to be paid, so it is a liability for you. You are going to put it towards the liability side. Salary is outstanding, 20,000. That means the entry which you pass to incorporate, actually you need not require to pass the entry, just for the sake of understanding, your entry is salary account debit, because due to this your expense will rise. Salary account debit to salary outstanding account, because you haven't paid this much of amount, it is yet to be paid. So 20,000, 20,000. Salary outstanding is a representative personal account, correct? So because of this, amount of salary will increase and balance will be left in the salary outstanding account. It will be reflected towards the liability side. Regarding outstanding expenses, I have seen students committing some mistakes. For example, suppose this is your trial This is your debit column. This is your credit column. Let us say outstanding, salaries outstanding. Let us say salary is given here 1,20,000 and salary is outstanding this time is given in the trial. Now if salary is outstanding is given in the trial, what does it mean? I gave you a clue. Something which is given in the trial will be posted only once, isn't it? And something which was given in trial also means that its treatment has already been done. So this time, how these items will be incorporated? No adjustment this time. Salary outstanding is given in the trial, correct? First of all, you will write this amount salaries. Needless to elaborate it, as we know that salaries will always find a place towards the debit side of P&L. 1,20,000. You are going to put them towards the debit side of P&L. Now salary outstanding is given in the trial. As we just saw a moment ago that if it happens to be given in an adjustments, then first of all it is added to the relevant item, then it also appears towards the liability side. However, this time actually it is given in the trial and posting will have to be done once. If it is given in trial, it means you have already passed this entry which I just mentioned earlier. If you have passed this entry, that means you need not require to pass this entry. That means now you need not require to increase the expenses. That means this amount has already been added. Is it clear to you? So only thing is that salaries outstanding now will appear only towards the liability side. This is the only treatment. Item which appears in the trial is posted only once. Is it clear to you? This I just wanted to bring to your notice. I have seen students sometimes unnecessarily add this item. So if it is given in the trial, you will have to actually post it only once. Is it clear? So this was regarding outstanding expenses. Similarly, now we take the third one, which is related to prepaid expenses. Prepaid expenses. Prepaid expenses are also referred to as unexpired expenses. Unexpired expenses. Also, it is referred to as expenses paid in advance. Expenses paid in advance. Expenses paid in advance. What does it mean? First of all, let me clarify the things. Let us say your accounting year this is your accounting year, correct? Let us say your accounting year starts from 1st of January 2020. It will end, your accounting year, it will end as at 31st of 12, 2020. Your accounting year will end over here, correct? Is it clear to you? Let us say rent per month is 10,000 rupees. Rent of premises, rent of office premises is rupees, let us say 10,000 per month. Correct? Let us say on this date, on 1st of January, you paid to the landlord, paid rent of rupees 1,50,000. On 1st of January, you paid a rent of 1,50,000. Actually, your rent is 10,000 per month. What does it mean? It means you have paid rent for these 12 months. These 12 months means these 12 months of this accounting period, correct? Besides, you have paid the rent of next 3 months. Next 3 months also. Because you have paid 1,50,000, your rent is 10,000 per month. So logically, in the current year, you should have paid 1,20,000, but you paid 1,50,000. So that means out of 1,50,000, 1,20,000 relates to current period, and 30,000 relates to next 3 months from the end of the current accounting year. Because when you will reach at the end of the accounting year, you will feel that expenses in the form of the rent should have been 1,20,000, but we have paid 1,50,000, that means 30,000 we have paid earlier for the next 3 months. So that means on this date, in accounting terminology, we will call this 30,000 as an unexpired amount. Unexpired means its services hasn't been utilized. Still this amount is unutilized. Unexpired means it is not yet died, it is not yet dead, and its benefit is to be received. Because this amount reflects that something is receivable against the same, because we can receive services against this amount in future. So on this date, we may have this feeling that this 30,000 is unexpired, it is prepaid, it is paid in advance, and against it some services are yet to be received. So that is why it is treated as an asset. First of all, this 30,000 will be treated as unexpired amount, or you can call it advance amount, unexpired amount, or you can call it as prepaid expenses, or you can call it as expenses paid in advance, whatever you may like to say. First of all, you must understand the meaning of unexpired. Now, I give you a trial balance. In the trial, balance, this is your debit side, this is your credit side. Let us say written over here, rent. Now something which is written in the trial balance means it has taken place. So rent itself means it has been paid, because it is written in trial balance. The word paid is not necessary here. Let us say rent paid 1,20,000. And you are given an adjustment. Rent in advance is 30,000. Rent in advance 30,000. You know the treatment, even I know, but still just we are trying to recapitulate the things and try to put the matter straight. So this is your P&L. Item which is written in the trial will be posted once. So rent, you are going to write it over here, 1,20,000, because this amount has been paid. Actually make it 150, sorry, because I just wanted to frame this question out of this example. Rent paid is 150. So you are going to write it here 1,50,000, correct? Because this is appearing here, you are going to put it over here. Now rent in pay advance. So this amount you have paid in advance. You haven't driven services worth 1,50,000. You have driven services of only 1,20,000. So logically, you need to reflect in the P&L account your real expenses, that is 1,20,000. Your expenses are not yet 1,50,000 because you haven't driven the services against the 1,50,000. You have driven the services against 1,20,000. So rent in advance or prepaid expenses or unexpired amount will be subtracted. It will be subtracted, number one. Number two, because it is considered as an asset. Why it is considered as an asset, I have already told you, because it is a sort of receivable in the sense that you are supposed to receive some services against this. So it will be reflected as an asset. So in the balance sheet, you are going to put it towards the asset side. You are going to write here prepaid rent, or you can write rent in advance. Prepaid rent, that is 30,000. This is how you are going to, what we could take care of rent paid in advance. Is it clear to you or not? Now, sometime what happens, rent or simply unexpired expenses or advances or prepaid are given only in trial balance, as is the case with outstanding expenses. Suppose you are given information like this: rent, debit, credit, 1,20,000, and you are being given rent in advance or prepaid rent in the trial itself. Let us say 30,000. If rent in advance is given in the trial balance, obviously it will come only once, correct? So I need not require to actually time and again repeat the same points. I have already told you so many times, item which appear in the trial will be posted only once. So this time when you will prepare your profit or loss account, you must understand that its effect has already been delivered because it is actually given in the trial. That means this item 120 is after deduction of 30,000, correct? So you will write here in the P&L rent 1,20,000. You need not require to subtract this time 30,000. Rent paid in advance you will simply put towards the asset side. Rent in advance. I hope you are getting an idea. If item is given in the trial itself, then what should be the treatment and why this treatment should be. Is it clear to you? Right. After taking care of this particular aspect, now we move over to accrued incomes. Accrued incomes. Accrued incomes, what does it mean actually? I will let you know in a short while. Let me draw out some figures. Let us say commission. Okay, no need to write receipt. I'm writing it towards the credit side because I want to reflect it as an income. So commission I am giving you here, let us say 1,20,000. And in the adjustment, I write this is your adjustment. In the adjustment, say it is given to you commission receivable. Commission receivable. Commission receivable means, it means commission earned but not yet received. Earned but not yet received, or yet to be received, but not yet. When we say not yet received, it means till the finalization of the accounts, till that date, it hasn't yet been received. So what is accrued income? Accrued income is something which you have earned. That means you have a right to claim that income, but till the end of the accounting year, that income is still due. It is not what we call receipt by the enterprise yet. It is just opposite of outstanding expenses, correct? As in case of outstanding expenses, first we add it to the relevant item, then reflect it towards the liability side. This time we will say the similar situation, but only thing is that this time it happens to be an income rather than what we call expense. So we are going to add first of all, of course, to the relevant item, but towards the credit side of P&L, and then whatever part we are supposed to receive, instead of putting it towards the liability side, we are going to put it towards the what we call asset side, because it is an asset. So it is just opposite of your outstanding expenses. So in the P&L, you are going to add it to the relevant item. First of all, commission, it is given in the credit side, so it means it is an income. $1,20,000. Let us say commission receivable amount I haven't written yet. Let us say it is 30,000. So first of all, you are going to add it because it reflects that you were supposed to receive 30,000 in the current year itself, but you did not receive. So full income in the form of commission should have been 1,50,000. So we will put it 150 here. Out of 150, we have received 120. But 30,000 is still to be receivable. It will be reflected towards the asset side. We can write accrued commission also. Commission accrued. Accrued means receivable. In the balance sheet, you are going to reflect it this way. Is it clear to you or not? Fine. I hope so. Suppose you are given information like this. Commission. It is being reflected towards the credit side. You have to be a little bit cautious with respect to items. When they are given towards debit side, they could be either expense or an asset. If they are given towards the credit side, they could be either incomes or what we call liabilities. Now commission here is given on the credit side, so we presume commission is actually 1,50,000. In fact, okay, 1,50,000. And this time, accrued commission, you must understand the meaning of accrued. Accrued commission means something which you were supposed to receive but you didn't receive it so far. Accrued commission. Accrued commission generally will have debit balance in case if it would be what we call reflected in the trial. Let us say it is 30,000 because it is receivable. Correct? So this is the situation which is given to you in this case. Now, how to post these items in the financial statements? Needless to add that these items have been reflected in the trial. No adjustment. So as far as P&L is concerned, commission will be posted over here. 1,50,000 full amount. Now you need not require to add or subtract because nothing is given in the adjustment. And accrued commission, it is given in trial. It means this part has already been added. That means whatever amount is being reflected in the form of commission, that is after the addition of the accrued income. So you need not require to add it again. Because accrued commission is given in what we call trial, it means its effect has already been incorporated. No further treatment is needed. All you need to do is to now post it towards the asset side. So you move over to the asset side, balance sheet part, right over there, accrued commission. $30,000. Is it clear to you? This is how the treatment of the accrued income shall be done. Is it clear to you or not? If it is clear to you or not, we will take another treatment of unearned income. What is unearned income? It is opposite of earned income. Unearned income. Unearned income, to be very honest with you, it is logically in contrast to the expenses paid in advance. In case of expenses which you have paid in advance, correct, you are not driving some portion of the services, some portion services against some portion of the amount, correct. Similarly, there is a case of unearned income. That means you have received the amount, but out of this amount some portion is such which you have received, but logically it is not yours. It is a sort of amount received in advance by the enterprise. It means enterprise has received some amount. Either enterprise hasn't given services against the same, or entity hasn't what we call given some goods and services against the same. Logically, it is still unearned. You haven't earned. Earned means when you have a right to claim that. So it is unearned. You do not have the right now. But you have received this amount. You have received this amount, but you haven't earned it. Earned it means you haven't provided against it any services or any goods and services. That is unearned income. It is also known as income received in advance. Income in advance. Income in advance. So I'll try to understand this one with the help of an example. This is your trial. In the trial, let us say I write rent. Remember one thing, this time I am reflecting it not towards the debit side, rather I am reflecting it towards the credit side. When rent is reflected towards the credit side, and let us say it is 1,50,000, it means this time your enterprise, your entity is receiving rent. It is an income, correct? So 1,50,000 is reflected towards the credit side. However, in the adjustment, you are given adjustment. One-third of rent, or should I say, okay, one-third of rent is unearned. It could be given this way, is unearned, or the language could be like this: one-third of rent is in advance, so either of these two wordings will be available. All in all, it would mean the same thing. That means you have, because it is given in trial, it means you have received this 1,50,000 you have received, but adjustment says that out of that 1/3 is still unearned. So that means that part you have received, but you haven't provided services against the same. So it will be treated as a liability. So we will have to reduce our income. This is profit and loss account. Rent is given towards the credit side. I will write rent towards the credit side of P&L. 1,50,000. It is given in the trial balance. It reflects that this much has been received. But in the adjustment, it is given that out of this 1/3 is still unearned or you have received in advance. So you will have to subtract 1/3. Income received in advance will be subtracted. 1/3 will be 50,000. So you will consider as if you have received only 1 lakh. This is called matching concept because you haven't given the services against the 50,000. And this extra amount which you have received will be treated as a sort of liability. It is a liability because you are yet to provide services against this amount. So you will write here rent in advance. Rent in advance. So this is how you will have to deal with this. Is it clear to you or not? So we end up this session. In the next one, we'll come out with some more adjustment issues.